We're here at the NCUA headquarters speaking to NCUA Chairman Debbie Matz about the outcome of the December board meeting. Chairman Matz, first I want to thank you for taking time to speak with us after this important meeting.
My pleasure.
At first I wanted to start with the charitable donations account rule that was approved. Why do you think that rule was necessary to approve?
Well, it's important for credit unions to have the opportunity to donate funds to charitable organizations, and this enables them to do it without having to be concerned that it's an impermissible investment. So we encourage credit unions to take advantage of this opportunity.
You mentioned during the meeting that it shouldn't be something that credit unions use to prop up income statements, for example. Could you elaborate a little bit on that?
Well, since some of these investments are considered impermissible investments, if they were just being done to enhance the balance sheet, we wanted to be clear that these investments have certain parameters and must be used for charitable contributions.
And the other rule that was approved, could you elaborate on why that was necessary, the technical amendments to the rating system for corporate credit unions?
Oh, thank you for asking. At a previous board meeting, we determined that the corporates should be rated on the CAMEL system basis as opposed to the CRIS that we had been using previously. And so there were just some technical amendments that needed to be done to bring our rules into conformity with that change.
And that's going to bring an advantage to the rating system, you think?
Well, it makes it more uniform so that it's easier to understand and easier to implement. It's easier to train our examiners so that we have one system. The examiners who examine the corporates will also be examining the largest credit unions. So it's from a training standpoint and from a comprehension standpoint, it's just easier to use. No other regulatory agency uses an alternative system such as CRIS. So this puts all of our regulated entities, all of the credit unions, whether they're corporate or natural person credit unions, on a par with all the other financial institutions in terms of how they're rated.
Now, when we look at the proposed rule on home-based federal credit unions, there was a disagreement, 2-1 on the proposed rule. You voted in support. Could you explain why the NCUA has the authority in this case to prohibit a federal credit union from operating in a home?
The NCUA has a broad authority to implement this statute requiring us to oversee safety and soundness in credit unions. And it's not specific about exactly how we go about doing that, but this comes under our broad authorities to regulate and ensure credit unions.
And what do you think this rule could do in terms of document protection or maybe preventing any issues that you've heard of at home-based credit unions?
Well, there are several different types of issues that we hope to address. One has to do with how the credit union is run. Some of these home-based credit unions don't have ways for members or for us to contact them. Amazingly, they don't have email accounts. They don't have even, in some cases, landline telephones. So we have found it impossible to contact them without actually going to their premises and knocking on the door. I imagine members have the same situation. But we're concerned about the protection of the records. Sometimes the records are kept in situations where they could accidentally be damaged. For instance, if there's a flood, or some records are kept near hot water heaters. They're not kept in fireproof containers. We're also concerned about members' privacy because if the records are in somebody's house, they can be looked at or taken by other family members, by guests in the house, and certainly by intruders. So that's one level of concern. The other level of concern that I feel this proposal addresses has to do with examiner safety. I don't believe that examiners should be going into somebody's private residence to examine their books. We've had examiners who have been bitten by dogs. We've had examiners working in conditions where they can't control the thermostat, so it's very cold in winter, very hot in summer. In some cases, they're not allowed to use the restroom at the home, so they actually have to get in their car and drive to a service station or to a fast food restaurant or to a hotel to use the restaurant there. I would not want to work under those conditions. I don't know anybody else who would, and we shouldn't impose those conditions on our examiners. So there are two very distinct reasons why I think it's time for home-based credit unions to move out of their homes and to move into accessible commercial facilities. And it doesn't have to be commercial. It could be in a community center. It could be in a church. It could be in a nonprofit. It definitely doesn't have to be a commercial facility, but it should not be in somebody's private residence.
There was an issue with a lot of ammunition being found at a credit union when examiners were entering. Does the NCUA coordinate with the local police department to make sure that everything is safe when they try to enter and access documents?
We don't coordinate in advance, but of course in situations where the examiner feels that there's a threat, at that point we do call in the local authorities and sometimes the national authorities. There's been instances where we've called in the FBI or the Secret Service, but on a routine basis we do not coordinate with local authorities before credit unions go into an institution.
And I wanted to ask you as well, as a last question, about risk-based capital, a rule that was said to possibly be considered before the end of the year. What challenges have you faced in terms of that risk-based capital rule, and what prevented it from being considered before the end of the year?
Well, as you know, this is a very complicated rule, and we want to be sure to get it right. The idea will be to risk-weight the capital, so credit unions that are holding riskier capital on their books will have to hold higher capital levels. It's very complicated. The staff has been working diligently on it, and they simply needed more time, and we encouraged them to take the time that they need because we want to make sure that they do get it right.
All right, I want to thank you so much for your time.
Thank you very much.
At the NCUA headquarters in Alexandria, Virginia, I'm Nicholas Balassi, and thanks for watching.